Good evening, everybody. Today we're going to cover the topic of the stock market that several of you have requested. I know that's being a little late for me to put out the video, but better late than pregnant, so I apologize for putting it out this late, but at least I'm putting it out. I want to start off by just giving you guys the most simplified definition of what the stock market really is. It's nothing more than a meeting place where both corporations and governments can actually raise capital by one of two ways. Either selling pieces of their entity or requesting loans and offering a rate of return to the investors that will let them borrow that money. That's the simplest definition of the stock market. To make it in layman's terms you guys can understand, it'd be no different than something like eBay. eBay is where sellers and buyers meet up to exchange goods and money for the benefit of one another. That's basically what the stock market really is. Now below the stock market, what you have is something obviously is a derivatives, so to speak, of what the market really is. Because after you have this exchange of money, then you always have investments, which investments is really just an exchange between investors and investors, post the company or the government have raised the money that they wanted. This is basically irrelevant to the corporation or to the government to a certain degree. Having known what the stock market really is, and based on the simplest of definitions, I'm gonna tell you what the nasty side of the stock market really is then. The stock market, most people don't understand this. When you trade the stock market, you invest in the stock market, it is nothing more than a casino because it is 90% psychology and 10% factual information. What I mean by that is this. You can have the healthiest of corporation financially, zero debt, great return on assets, beautiful financials, and if for some reason somebody wants to crash that stock and make that company invaluable, they really can, given that they have enough purchasing power to short the stock or sell enough against the company to basically devalue the company to such a degree that it would go bankrupt or would go bust. So investing in the stock market is a very tricky thing to do. But the primary purpose of it was what I initially told you. The thing is that obviously when there's a lot of money being exchanged, there's a lot of people that want to go in and they want to make money out of it. So that's when investments come into play. You have obviously the ETF, exchange traded funds. You have index funds. You have mutual funds. You have things that trade basically on debt securities and equity securities. You got options. You got stocks. You got all kinds of different things that trade hands on a daily basis, including futures contract. But that has nothing to do with the primary purpose of what the stock market really is. Some of the things that affect the stock market are obviously emotional things. When the Federal Reserve comes out and they make a statement that will always impact a broad range of the market, whether positively or negatively, regardless of what the status is of each individual company or entity. It makes really no difference. So the stock market is really a gamble if you don't understand human emotion. So for those of you trying to understand, I want to invest, I want to get into the stock market, what do I need to know? What you need to really study is human psychology. It doesn't really matter too much about finance. Yes, you want to go into a company that's healthy. Yes, you want to go to a company that's run well. But at the end of the day, there's been tons of companies out there, and you can go up as far back as the dot-com boom, where companies weren't doing shit, they weren't making any kind of revenues, and their stock was trading at infinite PE ratios, which is unheard of. A company that basically had no income or no earnings whatsoever, and their price was skyrocketing as if they were making 4,000% on their money every single year. So I just let you know that basically the psychology of the market, and you understand how people react and how people think, it's really what's going to make you money to a certain degree on the stock market, especially long term. So now you get a foundation at least what the stock market really is. Let me go a little bit more in depth into some of the instruments or the primary instruments that actually really develop inside the stock market and what the purposes are. When a company wants to raise capital and basically not owe any kind of money back to anybody, what they do is they sell pieces of the business. That is called stock. So when you go into the stock market and you buy stock, what you're actually buying is portions of a company that they're trying to raise capital to probably expand. When a company doesn't want to sell their company, they just want to basically raise money in terms of a loan, what they do is they issue something called corporate bonds. Corporate bonds are nothing more than basically notes that say, hey, let me borrow $1,000, I'm going to pay you this rate of return on that money so long as you let me keep this loan for whatever time period they denoted on that bond. Those are the two ways and the primary purposes through which corporations and governments, and the reason why the stock market was really basically founded, to basically facilitate expansion of the US, because without having that liquidity available for companies, how the hell are we supposed to create jobs? That's really how they create it. Company which is a limited production, they're very profitable, and they need to expand quickly, so there's two ways to do it very rapidly. You go into the stock market, you sell some of the company, or you issue obviously debt securities. You can raise capital in the form of a loan, so you can expand your business and obviously make better, faster products, and obviously employ more people so you can help the economy grow further. Okay, so now that you have all that information, why the hell would you invest in the stock market? Let me tell you the only reason why you should invest in the stock market. The stock market is really made for people, when you go on the investment side of it, that don't have the entrepreneurship, the drive, or the know-how to basically start their own corporation to make it basically grow and make money for themselves. If you don't have the ability to drive to do any of that, then yes, participate in the stock market, because then you can actually go buy corporations. You can choose which corporations are properly run, and then you can invest in those corporations, hopefully make a return over time. If you do have the drive, then stay the hell away from the stock market. Your best investment is going to be yourself. Because if you know how to make a business, how to make it grow, how to expand it, do you think Steve Jobs invested in the stock market? Not really. He invested all of it in Apple. The same thing with Bill Gates. The same thing with Warren Buffett. He invests in their corporations because they understand that they are by far the better investment than anything out there. They say, I am better at running a corporation than any of these dumbasses, so why would I invest in their companies when I can just invest in mine, diversify my company, not only from a domestic standpoint, but international standpoint, and make money that way. So the stock market is made for the layman individual that basically is a 9-to-5 worker or a salesperson that doesn't have any time to basically look at the stock market, trade, or has to know how to build a corporation. So they have to put the money in there to hope that the money grows, beats inflation, so they can have a comfortable retirement when they do retire. So I hope this gives you a very broad overview because there's so much to know about the stock market. I'm not going to bore you guys. It's already a boring enough topic. So if you guys have any specific questions, what I'm going to do is I'm going to answer them on the comments area. If I feel there's a topic or a derivative of this topic that needs to be expanded on, then I will make a secondary video. But until then, I want to thank you guys for putting this topic in my hands. It's one of my favorite topics as my finance and economics majors. You guys already know. And there's one thing I do want you guys to keep an eye out on. October 17th, actually, the U.S. Basically reaches its borrowing limit. We're going to be left over with about $33 billion to pay all of our bills. And come November 1st, the U.S. actually has bills due of approximately $70 billion. So there's a big issue in raising the debt ceiling in the U.S. so we can actually meet those responsibilities. If we don't, we're going to have the first default of the U.S. government in the history of our country. So I want you guys to keep an eye on that to see how basically this impacts. Just think of it, what happened in Spain when they went bankrupt, when Greece went bankrupt, and you're going to realize what impact it would have if that would happen here at home. Those of you that have filed for your 2012 taxes that you guys have not received your tax return yet, this is probably going to be the reason why you haven't received. The government's a little bit short on cash, so that's probably the reason why some people have not received their tax returns, myself being one of them. I'm waiting for that check to come in the mail. And lastly, I want to do some live stream for you guys because I feel that some of these topics can better be addressed by me doing them live with you. However, I have no freaking clue how to go about establishing a live stream or anything like that. So if you know how to do that, email me at my box and I will be sure to reply to you. We can probably do a Skype conversation and show me how to basically stream, and then we can have some of these conversations actually over live wire. So until then, you guys take care. Have a good evening. Sorry for the late video, and I'll talk to you guys soon. Take care.